Hi there, my name is Peter Garnry. I'm Head of Equity Strategy and I'm joined by my colleague Ida Johannesson, the Head of Commercial ESG, and we're going to talk about COP28. We are in the final hours of the debate and discussions around the targets and the deal that can be agreed on at the COP28. And Ida, although we are not completely done yet with the final deal, what are sort of the things that we have got out of the COP28 meeting so far?
I could mention a few major achievements.
Yeah.
First of all, there was the global stocktake, which is an assessment of the climate situation. Essentially, where do we stand? What has happened since the Paris Agreement in 2015? And what are the areas of failure? Now, the reason of such an exercise that takes about 2 years, it's really to face reality and look at the science. The second major achievement I would mention is the Global Renewables and Energy Efficiency Pledge. The pledge is essentially to triple renewables capacity by 2030. And this will bring wind and solar to about 40% of global electricity generation. The thing here is 118 countries have signed the pledge, but heavyweights like China, Saudi Arabia, the Philippines, Indonesia, Russia have not signed it yet. Maybe we'll see what happens. And lastly, I would mention the Loss and Damage Fund, which was established during COP27 to help countries that are vulnerable to climate change deal with the consequences of climate change. Countries like Chad that have an agriculture that is highly susceptible to just a few more days of dry season, and the island nation of Vanuatu in the Pacific, which is most at risk from natural disasters. Ironically, those countries have negligible emissions, but they are the ones most at risk from climate change. These, I would say, are the main takeaways from COP28.
Great, thank you for that analysis, Ida. If we look at the COP28 and what have been coming out of it so far, are you satisfied with the deal that is in the making and what have been some of the sub-deals that have been made in order to tackle this huge task ahead of us of climate change and basically the fate of the planet?
I think my answer would be nuanced, yes and no. Yes, it is satisfactory because COP is the opportunity for close to 200 countries to meet and discuss and negotiate the fate of the planet when it comes to climate change. But no, because it's clearly not enough. Like most people, I feel like we need more action than just discussions and planning. For example, when we take the stocktake, it is clearly not enough. The results of the stocktakes are not good. The Paris Agreement goal is to limit global warming to 2 degrees Celsius and preferably 1.5 degrees, but we are more on a trajectory of 2.5 or maybe even 3, which can have disastrous consequences for the planet. But at the end of the day, Peter, it is important to remember that at events like COP28 and other COPs, we do make progress. It might be small steps, sometimes we might even be moving sideways, but it is better than doing nothing. So now, Peter, you are the fundamental analyst expert at Saxo. Can you tell us if we've seen any impact from COP28 on financial markets and what you expect the impact could be for an industry like renewables?
Yeah, so we can say that the market impact we have seen during the COP28 has been quite interesting actually, and an irony almost, because the oil price has declined quite substantially. We have seen renewable energy stocks doing quite fine. And that has been mostly related, I think, to falling interest rates and maybe not so much to COP28, but there's a lot of discussions about renewable energy. You mentioned the target to triple the amount of capacity of renewable energy. We have seen some noise around nuclear power. It hasn't really moved the needle a lot. I know there will be a summit in March around nuclear power. The problem is that there is a squeeze on uranium prices. We're getting very close to a level in uranium prices where nuclear power is actually not very competitive with renewable energy. I think that if you look at the years so far in 2023, the green transformation stocks have been hurt dramatically from two sources. Lower natural gas prices, which make it more affordable and more competitive to build gas turbines for power plant or electricity production, and then the high interest rates. I think one of the key trends to watch in 2024 is that there's a huge commitment to do renewable energy. You need energy storage to go alongside renewable energy because it's not a stable electricity source. Sometimes both the wind and the sun are not there. But then the low interest rates, which the market is pricing in for 2024, I think will help tremendously to change the sentiment around renewable energy stocks. So I think the whole green transformation, I think, is set for a very different and much more positive 2024 than what we saw in 2023. And I think hopefully COP28 will establish a very strong underlying trend in renewable energy in the decades to come.